Folks, this is probably going to cause more harm than good. I'll tell you what I mean and then get into the latest home prices and insights for the city of Toronto for week ending, I forgot what day we were, September 18, 2024. This is going to cause more harm than good. Let me tell you what I'm talking about. There's been a whole bunch of policy changes, mortgage rule changes, kind of in the works right now. Well, I can tell you firsthand what I've already started experiencing in the field. We have a property listed for sale, and an agent phones me representing a buyer. This was a few weeks ago. Representing a buyer saying, Santo, please try to see if your client, the seller, would be interested at a certain number for sale because that's the absolute most my client can afford due to financing. And normally I wouldn't entertain those calls, and I'm normally trying to get the buyer's agent to put it in writing. And I said, okay, you know what? Let me just ask. So I spoke with my seller client, and he wasn't having it. And I went back to the buyer's agent and said, look, it's just too low. My client's not going to even entertain that. That was the end of the discussion. Fast forward to today, it's a few weeks later, the same agent calls me back and says, Santo, my client can afford more now. Can you please check with the seller if they're okay with this number? And I said, oh, what's changed with your client? Because a while ago, just a few weeks ago, that was the most they can afford, financing-wise. That's what you told me. What's changed? And the agent said, well, it's due to the new mortgage rule changes. My client can now spend more, now can afford to buy more money on a house he can afford to spend. Folks, this rule has not even taken effect yet. We don't know all the fine details. We don't know the fine print. We don't even know how it's going to work out in the wash and how somebody's going to qualify. We don't know all these details yet. Yet this agent is potentially, I don't know who else he's speaking with, but potentially about to put in an offer on a property based on a rule hasn't taken effect yet, and we don't know how it's going to work out. And for those of you that don't know, the rule I'm speaking about is at $1 million, if you're buying a property for $1 million, it used to be that anything over $1 million, the buyer had to put down a minimum of 20%. That's the rule that's changed for first-time home buyers. First-time home buyers now, instead of at $1 million or over $1 million, you need 20%. That post has now been moved to 1.5 million. So the government has basically said to first-time home buyers, we'll allow you to buy up to 1.5 million without needing 20%. You could buy for less than 20%, but over 1.5, you got to do the full 20% down payment. So with less money down, the government's allowing first-time home buyers to get more access to more financing. So when I explained my situation with this buyer agent, right away I thought, how is he able, there's such a risk there in getting an offer accepted and your buyer potentially, when all the details roll out, maybe doesn't even qualify for what they thought they qualified for. So there's a potential risk there. The other part to this is, this was all designed, this changing of the mortgage was designed to help buyers or first-time home buyers get into the market, designed to get them to access more property, more money, and to allow them to kind of start at the bottom end of the property ladder. Well, I think a consequence of the way they're changing this is that it has the potential for sellers not to feel as much pressure to lower their price. Now look, if buyers don't show up and there's no showings happening, for sure, that's also a factor that's definitely going to bring down prices. But if buyers can actually access more money now, I think indirectly, sellers, I think we're going to see maybe holding on to their prices a little bit more. That's on a side note. The real issue I have with this is the fact that buyers now can access more money. Now, for many buyers, let me even say for most buyers, that's no problem. They are very responsible with their financing. They're very responsible with what they buy. They're very responsible in not buying more than they can afford and not taking on more debt than they can handle. But we've also seen from recent history, there's too many buyers that don't have those kind of controls and those kind of financing capabilities, where if they have access to more money, that's exactly what they will do. It's not like they're going to buy less or have it easier for them to buy. They're actually going to go right to their limit, and instead of maybe spending 1.1 on a home, they might go to 1.3 or 1.4 because now they can. And that's really where I see the potential of doing more harm than good. We're not making homes more affordable. What we're doing with this policy is lending more money to the buyers so the buyers can access more financing, and that's a potential risk. And this is what's happening with that agent that called me. And there's other issues there, like the policy is not even taken into effect, but I can see this down the road. Buyers, if you're going to take advantage of this policy, and many will, be careful about, just because you can access more money, it may not always be the smart thing for you to do. If you think this video can help somebody you know, please pass it along. If you get value from what we're talking about, subscribe. If you want to speak with me about your real estate situation, selling, buying, it's really simple. There's a link up here. There's a link below this video in the description. The link is to my calendar. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. Now, let's get into the numbers. Folks, we have two awesome semi-detached properties in South Etobicoke. They were just completed. Check out one of them at the end of this video. Okay, so before we get into our weekly programming here, I need to bring up a chart that I talked about on last week's Toronto show for the city of Toronto, and that's the monthly chart. Now, for August 2024, the average sold price is 1,692, 1,692,000. I don't know what happened and what I was thinking, because I've got the numbers right here. But last week, as I was comparing to the multiple years going back, and we're going back on this chart as far as August 2020, I kept saying that the current average sold price is lower than these multiple years going back, August comparing to August. And that's just not true. I don't know why I said it. It was a slip. So I'm correcting it here. August 2024, when comparing back to each August going back to August 2020, this is the highest average sold price we've had when we compare to these previous 5 years. There, just want to clear the air there. Now, our regular programming, broken down by week, we're going to look at properties, freehold properties across the city of Toronto only, detached, semis, and towns. I do have condos up here for comparison, but we're going to start off with the detached market. So detached properties, city of Toronto, for week ending September 18th, big jump in sales volume versus the previous week. 180 were sold. 34 of those were at $2 million or more. Now, when we look at 180, and I drew a straight line, that line is not so much for direction. It's more of to kind of gauge how good is 180 sales in a week. And when we look at this year, 180, there's only really 1, 2, 3, 4, 5 other weeks this year where sales were higher. So we're comparing the fall, week ending September 18th, to a bunch of weeks we had in April, May, and June. So we're comparing to the spring season. So 180 is actually quite good, 180 sales in 1 week. Sales, however, were trending down since the beginning of July to August and the first week of September. And although I've got them going up now, it really is only 2 weeks that we've seen the increase. But maybe this is a sign of times to come for the fall season. 180 is pretty good in a week. Average sold price is $1,535,000, and it's kind of been hovering around there, somewhere in the mid 1.5 over the last 4 weeks or so. So we've got to keep an eye on that. But so average sold price kind of flat over the last few weeks. Sales, we're seeing it kind of increasing each week. 1,535,000 is 14% lower than where we were this time a year ago. The median price is 6% lower. The dotted line, that's a 4-week moving average. Both median and average price seem to be trending down. Sales, well, we went from 107 to 180 sales. 49% of those sales sold at list price or more. We're seeing it in some areas where activity's picking up. More showings, more offers. We're starting to see a bit of a jump in activity. Listings, although listings are down quite a bit from the previous week, 551 detached properties were listed. 551 is a very aggressive week of listings, especially we look back here. I've got 3 months on the board. Active listings has been jumping up. We're now at 2,145 active listings. I've gone back a whole bunch of months, and I didn't go back for years and years, but this may be a time where we've seen, there's few times in history where we've seen more active listings of detached properties. Months of inventory down to 2.8 months of inventory. Months of inventory 3 months ago was sitting at between 2.7 and 3. Well, we're kind of back to where we were 3 months ago. Months of inventory was trending up. Now it looks like I forgot to put the arrow there. For a couple weeks though, it's come down a little bit. And that's the whole city of Toronto for detached properties. It looks like the market is starting to wake up a little bit. Here's a breakdown of different parts of the city. We've got 9 different sections here. So the whole city averages out to 2.8 months of inventory, but some neighborhoods are going to be a little bit more aggressive than that. Scarborough, for example, is 2.1 months of inventory. 62% of those properties sold at list price or more. Scarborough is often one of the more competitive parts of the city. 52 sales were done in Scarborough, and I just noted that that's 29% of all the sales of the city of Toronto. East York, Riverdale Beach is 1.6 months of inventory. 68% of those properties sold at list price or more. Very competitive in that area. High Park, Parkdale, 1.7 months of inventory. And you can kind of see some of the different areas here. You're in the middle here at York Mills, Rosedale. Over almost 3.1 is the average sold price. Well, months of inventory there is 5.4. And yet, 47% still sold at list price or more. Here's semi-detached properties. 48 of those were sold for week ending September 18th. 13 were at $1.5 million or more. 48, similar to the previous week. Average sold price is $1,290,000. 1,290 is 6% lower year over year. The median price of $1,222,000 is 2% lower year over year. Months of inventory for semis is 2.2 months of inventory. 60% of the semis sold at list price or more. Townhomes, these are freehold townhomes. Sales are up a little bit. 15 townhomes were sold. One of those was at $1.5 million or more. Average sold price is $1,105,000. 1,105 is 11% lower year over year. The median is only 1% lower year over year. Months of inventory sitting at 3.4 for townhouses. Now, 80% of those townhouses sold at list price or more. Here's a quick summary. Just for fun, I compared to where months of inventory were for the same week a year ago. So last year, 2023, 2.8 is where we are now. Last year was 2.6 months of inventory. Semis 1.7, towns 1.9. Big change in condos, 5.3 a year ago. We're now at 7.8. And townhouse a big change, but semis and detached, it's really not such a big change in months of inventory. So it's just for information. It doesn't matter what happened a year ago. If you're transacting, you're looking to buy, you're looking to sell, the only thing that matters is what's happening right now and what direction are we going, because that's going to help in your decision whether it makes sense for you to sell or to buy. Thanks for watching. Have an awesome day. Now check out this awesome semi-detached we have. We have 2 custom designed semi-detached properties. We're in Alderwood, South Etobicoke. These semi-detached come with a legal secondary suite. Let me show you 223 Hallmark Avenue.